Hello, family, and welcome to How to Get the Business Funding You Deserve from Banks and Angel Investors. I'm so happy to have you here today. My name is Cheree Warrick. I am the author of a book called Creating Business Plans That Actually Get Financed. I'm a speaker. I'm a national expert. I've been fortunate enough to speak in all sorts of states from Maryland and Virginia and Pennsylvania all the way to Las Vegas and Newport Beach, California. And I'm so excited to talk about this topic today, how you can get the business funding your small business deserves from banks and angel investors. So let's dive right in and talk about the 4 questions that I commonly get as I'm speaking across the nation to different companies. Number 1 is if you should ask for capital. Number 2 is when you should ask for capital. Number 3, whom you should ask for capital. And number 4, how you should ask for capital. So we're going to talk about those 4 items today. And I'm going to start off telling you a little bit about myself and how I became an expert on this topic. It starts with this beautiful woman that's on your screen here. Can you guess who she is? If you said my mother, you are correct. My mom owns a small business in Fairfax, Virginia called Carolyn Does QuickBooks. She is a bookkeeper, and she had her business for a few years. She was successful. She decided she wanted to grow. She said, okay, Cheree, I want a business loan. I'm going to go to the bank. I need a business plan. You have the master's degree. You write the business plan. And then she leaves. And what do? I say, okay. I've written a business plan for school before, but I never wrote a business plan to actually raise capital. What do I do now? How do I actually not disappoint my family, not disappoint mom? How do you do that? Well, I started off with Google, with Amazon. I pulled together what I could. I showed it to a mentor of mine that had 40 years experience in raising capital and building businesses. He said, make these changes and show it to the bank. And the bank said it was one of the best business plans that they had ever read. And after that, I just became fascinated with why certain entrepreneurs are able to raise millions and millions of dollars continuously for various businesses. And most businesses cannot raise any money. In fact, I was reading on the SBA website one day that 57% of small business owners do not know how to properly ask for capital. So I interviewed more people, and I put it together in a book called Creating Business Plans That Actually Get Financed. It's on Amazon, and I also offer it for people who come and see me live. So we're going to talk a little bit today about the strategies within creating business plans that actually get financed. And you may ask yourself, well, how do I know what you're talking about even works? Well, I was fortunate enough to get many testimonials, one of them from Barbara Corcoran of ABC Shark Tank, who says, my experience on Shark Tank has taught me how to spot the startups most likely to succeed and get funding. The strategies taught by Cheree offers entrepreneurs the best shot at receiving capital from investors like me. But again, she's not the only one. I've had testimonials from angel investors like Valerie Gatos of the Angel Venture Forum of D.C., Karen Gillison, an angel investor who is so funny that she bought multiple copies of my book and distributes it to people who actually comes to her asking for funding. Tian Wong, who is an angel investor as well. Also, I've received testimonials from bankers from these specific banks: Capital One, BB&T, Access National Bank, FSC First, and they've seen my work. A couple of them have actually approved clients that I've worked with. One of them is actually in the process of approving one of my clients, so I'm super excited to be able to offer you this information today in this webinar format. So I have a trivia question for you. How much money do you think is actually being invested in small businesses? The answer: banks and angel investors gave $5.9 million small businesses, startups, and early-stage companies over $228 billion in 2012. Did you know it was that much? $228 billion to 5.9 million businesses. Now, the 2013 stats aren't out yet just because the U.S. government is slow with the bank numbers, but I can tell you angel investment money has gone up even more. There are over 280,000 angel investors that are actively looking for deals, actively looking for businesses to put money into, and the average angel investment is about $330,000 per company. So the good news is that there is money out there. So number one, we talked about the questions we're going to ask today is if you should raise capital. There are two types of business models that you can have. Number one is the lifestyle business, and number two is a scalable business. Now, the lifestyle business is if you're going to have a company that's going to be a couple $100,000, maybe $300,000, $500,000 a year, and you're not really looking to grow it exponentially. That's called a lifestyle business. It is rare to get money for a lifestyle business. Banks and angel investors are interested in putting their money into scalable businesses. Those are businesses that can actually handle an additional 10,000, 100,000, million customers, and we see their profits grow exponentially because of it. So then question number two is when you should raise capital. The perfect time to raise capital is after you've been in business for a couple of years, you have sold your product many times, and you have unlocked the formula to attracting and converting paying customers and servicing those paying customers so well that they refer and are extremely happy with you. Because then you're able to say, Mr. or Ms. Investor, I've tested my concept, it's proven, we're making money with it, and if you give us $500,000, we can grow this company from $300,000 a year in revenues to $30 million, and here's how we're going to do it. So proven concepts attract investments. And I love this T-shirt here. It says, your mom is not a valid test market. So you have to find multiple people who are willing to purchase whatever it is you're offering. Question number three, who should you ask for capital? You have an opportunity to ask banks, angel investors, venture capitalists, there's crowdfunding, there's alternative financing, there are a myriad of people and sources out there, but I'm just going to deal with these three because it's the ones that I hear most often within the people that I train at different conferences and the clients that I work with. You ask a bank if you have steady cash flow within your business and if you have adequate collateral and personal credit. Now, you may say, okay, Cheree, well, what's adequate? Well, that depends on the bank, and it depends on the program that the bank wants to put you into. If it's an SBA program, which one? If they don't want to do SBA. So my suggestion to you is ask several banks and just in bullet points say, here's my collateral, here's my credit, here's my business idea, here's where we're expecting to go. Is this something that you would approve? I do that with my clients all the time. And the banker will say, yes, I just did something like that last month, or they'll say, no, that really doesn't work with us. And before you spend any time actually filling out applications unnecessarily, you kind of have a, yeah, that's something we could potentially do. I spoke with my underwriter, and they said that that is something that we can do. And then those are the banks that you actually put the applications in for. Let's go to the other side of the screen and talk about venture capitalists. If you're going to grow a billion-dollar company and you want to take all of the money, all the revenues that you're getting and reinvest it, VCs are a great opportunity for you. Those are the types of companies that venture capitalists or private equity firms are looking for. If you're in between, you want to reinvest your revenues in the business, or your business doesn't have a steady cash flow yet, but it will in a couple of years, and you're not going to grow to $1 billion company. Let's say you want to grow to $20 million, $30 million. An angel investor is the best option for you. So, question, how do small businesses raise capital? Well, the answer for that is through the creation of an investable business plan. And many people think that a business plan is a necessary evil of the capital raising process. But I believe something differently. I believe that an investable business plan preps you to pitch. It enables you to go through all of the what-if scenarios so that when that investor is asking you questions, you speak with such confidence about your product, your service, your marketplace, that they say, you know what, I want to put money in this entrepreneur. And that's what you're trying to prove. So there are 6 parts to an investable business plan. There's the market opportunity, customer acquisition and retention, team, competitive analysis, financial statements, and your payback plan for angels and VCs. So part 1 of your investable business plan, tell them your market opportunity. What problem are you solving in the marketplace? When I speak, this is my favorite slide. I have fun with people when I do this. You see 5 brands, 5 logos on your screen: ESPN, Disney Channel, Food Network, Telemundo, QVC. What do these companies have in common? Well, they're all TV stations. They're all on basic cable television. They are highly niched. Within one word, you can describe the target market they're going after, even if you've never seen the station before. So if I say ESPN, you say sports. Disney, kids. Food Network, food. Telemundo, Latino. QVC, shopping. But there's one more thing that all of these networks have in common, and that is that they are the most profitable networks on basic cable television. In the same way, when I talked about ESPN, the Disney Channel, and Food Network, I was able to easily explain what they do and who their target market is. You have to be able, within 1 to 2 sentences, to explain what you're doing and who your target market is. If it's a huge explanation to explain what you have, what you do, the problem that you're solving, and your target market, you are going to have a really hard time raising money. Part 2, you got to tell them how you're going to get the customers in. This was called a marketing plan. I changed it up to a customer acquisition and retention plan, but you've got to get and keep customers coming in time after time. So I have here Pepsi. You can see the evolution of Pepsi in terms of their sponsorships over the years. So one of the ways they get and keep customers is by having celebrities, and celebrities could be considered referral partners based on the fans, and they could be considered for different types of advertising. But you have Beyonce and Britney Spears and Michael Jackson. I was speaking at a college, and, one of the young ladies said, Pepsi does a great job of keeping up with the times and evolving with the times and the different generations. I said, that's a good point. But I'll tell you something else that Pepsi does in order to get and keep customers is that they are everywhere. You go into a 7-Eleven. You go into a grocery store. How many of us have gone into a grocery store, you had no intention of buying a Pepsi product, and then you walk in, and immediately what do you see? You see the display. And especially now it's football time, it's the end of September, you see these displays, and you think, oh, I've got to have that. So it's called an impulse buy. Well, that's all a part of their marketing plan as well, and you have to have a marketing plan that tells the investor how you're going to get and how you're going to keep customers. Part 3, you have to tell them who's on your team. Number one reason My mentor taught me this. The number one reason that business plans are denied is not because of a bad idea, but because of an inadequate team. The investor doesn't believe that your team will be able to reach the business objectives that you set. So if you want to grow a $30 million company and you've personally never done it, you have to have someone on your team who has done that. If you are not a numbers person, you have to have a strong CFO or a strong accountant working with you, and that's part of your team. And how often are you two meeting? Because money follows great leadership and cohesive teams. It's not enough to say, oh, I don't know numbers, the CFO is over there, they're doing their thing. No. Great teams have three parts. They have offense, defense, and the coach. I know some of you are saying special teams, but just go with me here, okay? Offense. Offense in a football game puts points on the board. In a business setting, they make sales. So it's your sales team, marketing, business development. Defense on the football field protects. In business, they protect as well. And there are four areas that need great protection. Accounting, so money, payroll, your bank accounts. Number two, IT. If your website goes down or your network goes down, you have trouble. Number three, HR. If you have a human resource problem, it can mean trouble. And number four, legal. If you have a legal problem or an insurance problem, you are not adequately insured for a flood or a business interruption, you can end up losing the game because you aren't adequately prepared for that. And let me tell you something. Investors know that as well. So bringing the team together, if you are the coach of your team, i.e. your business, you bring people together, you bring offense, defense, or marketing, production, back office, and when you bring them together, it increases the profitability. So the last W-2 job that I had, the company grew from $50 million to $200 million in a 5-year period. And one of the things that they did is every month, CEO, CFO, COO, and a couple of VPs, and I was fortunate enough to be invited to some of those meetings, they all got together and they all reviewed what they called the business indicators, or we had snapshots of what was happening with all the projects within that business. And that was one of the key reasons why that company grew exponentially. And then once a quarter, they had their board come in and take a look at those indicators, and the board was able to offer a different perspective. Investors understand the power of these things. They're more than happy to give you a little bit of additional money if you're going to have a couple of advisory board members that can introduce you to million-dollar opportunities or show you a different perspective of your business. Or, those advisory board members have grown billion-dollar businesses, and you're on your way, and they're going to meet with you once a quarter in order to review your overall business. Part 4. Competitive advantage. You have to talk about your competition and who the competition is. My best example is the beverage industry. Most importantly, water. Let's say you're a water company, okay? If you think everybody needs water, therefore the entire world is our client or our customer, you are not going to receive any money. Why not? Because there are different levels. Some people refuse to buy bottled water. They think tap is just fine. Other people like filters. They don't want to harm the environment. Other people like Fuji or a more exotic type of water. They'll never buy your brand. And then there are other people, believe it or not, that don't drink water at all. They drink Gatorade. They drink coffee all day, or Coke or Pepsi. So understanding that, how do we translate that to your business. Your business will have competition, so it's important for you to acknowledge that competition and acknowledge your competitive advantage within that marketplace. Part 5 of an investable business plan, you got to show them the money. The financial statements are very important. After reading the executive summary, people go to the financial statements in order to see what you're projecting for your business. So I have a couple of jokes here that I love. If you hate numbers, there's a couple of jokes I have. Dear Math, I'm sick and tired of finding your ex. Just accept the fact that she is gone and move on, dude. Or, Your Honor, my client pleads not guilty to tax evasion by reason of math phobia. Now, we know that that doesn't work in front of judge, so it doesn't work in front of investors or banks either. You have to speak like you know your numbers. And don't be afraid of numbers. If you do the business plan correctly, you'll inherently know the numbers that you need to know. And the numbers that you need to know really are a couple of things. Number one is the cost of acquiring a new customer or client. Number two is the annual and lifetime value of a client. So if you're able to say to an investor, we sell pies and cakes, and for every new customer that we bring, they tend to stay an average of 4 years, and they tend to spend an average of $3,715. Well, that impresses an angel investor that you know that. You also want to know the cost of producing your product and what percentage of that is cost of goods sold, and what percentage of that is additional profits or gross profit margin that can go towards administrative expenses. You want to know your net profit margin, and you want to know how much money you're asking for and what the funds are going to be used for. And then part 6, you got to tell them, the angel investor specifically, how they're going to get their money back. Now, part 6 is not for banks because banks get paid every month. But for angel investors, they may not get paid every month. They may not get paid every quarter. You may want to reinvest those funds. But you have to have a way to tell them how they're going to get their $330,000 back. There are 3 examples. There are multiple ways that you can do this, but there are 3 examples, or 3 examples of how you can pay angel investors. Number 1 is, let's say you are not bankable at this time, but you will be in 3 years. One thing that you can do is say, Mr. Angel Investor, you can give me $150,000 now. I've spoken with 3 banks. They say that once our cash flow gets to X level, I will be able to get a bank loan, and I'll be able to pay you back from the proceeds. Number 2, you can set your company up to be purchased one day. So let's say that, angel investor puts $150,000 in your company, and you grow it over the next 4 years, and 4 years from now, your plan is to sell it to a competitor or to a complementary company for $6 million. They get, the angel investor gets a certain portion, you get a certain portion. And another way is initial public offering. We just had a big one with Alibaba. IPOs, all IPOs are a way of cashing out angel investors through the stock market. Okay? But that is an option. So why should you raise capital now? It is the end of September 2014, and you may think, I don't know if I want to do this right now. Well, if you're at a good point in your business in terms of revenues and you're thinking 2015, you want to be able to have some money to grow and expand exponentially, you really need to get started now. It takes an average of 2 to 6 months after your business plan is complete for you to get your funding. And I will tell you, a business plan takes on average, a good one takes on average about 4 to 6 weeks to create. Okay? So for Happy New Year 2015, you can have the funding that you need to really grow, expand, add new staff, get more marketing and advertising out there, etc. And my goal is to help 1,000 entrepreneurs over the course of time raise over $1 billion, particularly in the Mid-Atlantic area. Again, economic development, job growth. I love working with non-tech companies. I will work with tech companies as well, but that's really my goal and my passion is to help Mid-Atlantic companies raise the funding they deserve to grow their businesses. So we write business plans for companies seeking bank funding and angel investment. And our process is this. You retain us. We sit down for 2 hours, and we go through something called the business plan questionnaire. It's 6 pages. It's in-depth, but you talk out your business. You don't have to write a whole bunch of information. Then we take the answers to your questions, and we write draft 1 of your business plan. And you review it. Now, draft 1, what I do is I look at it from the perspective of the banker, the angel investor, and I ask what risk factors are within your business, and I try to answer that within the business plan. But draft 1, I will tell you, will have all sorts of questions and comments, and sometimes we work on strategy, business strategy, so all of that is included. I'll ask you questions. You'll review draft 1. You'll give me responses, and then we'll write draft 2. Draft 2 will have your executive summary and your projected financials. And I have a master's degree in finance, so I'm able to put that together for you. You review that draft 2, and then draft 3 is your final product. During this time, we're also helping you perfect your pitch and get your pitch right. And the average time this takes is about 6 weeks for a client to actually get through all 3 drafts and get their final product. So we're seeking 3 companies to assist to help write their business plans to raise capital. The reason we're doing this, I'm a little selfish, is because I'm filming a TV show in March of 2015 to educate entrepreneurs. I want to educate tens of thousands of entrepreneurs on this, and I'm looking for some additional case studies. So if you would like to be one of my case studies, I'd love to have you. My normal business plan rates are $2,000 retainer, $2,000 when the business plan is complete, and $2,500 when the business is funded. However, if you're one of my 3 case studies, I will reduce that significantly. You're going to get a $750 retainer, $750 when the business plan is complete, $2,500 I'm still requesting when your business is funded. You agree to provide a testimonial for my television show, and I do have a guarantee, and here's my guarantee. If we work together, we write the business plan, and you present it to 3 banks or a minimum of 10 angel investors, and the primary reason that you are turned down is because of the quality of the business plan, I will give you your money back. One thing that I'm good at is writing investable business plans, and I'm willing to put my money and my guarantee where my mouth is. I cannot guarantee you will be funded just because there are elements that are out of my control in terms of your credit, your collateral, your ability to pitch, but I do work very hard to make sure that I set you up to receive a yes. So if this sounds at all like something you want to do, I would love to chat with you. My office number is on the screen, 703-934-4630, or you can email me. And once the 3 slots are gone, that's going to be it. But I would love to work with you in order to help make your capital dreams come true. Thank you, and have a blessed day.